Good afternoon, everyone. If you can hear me and if you can see my screen, please type Y. So we've made it. Friday the 20th of August, just 12:25 here in London. Thanks everyone for logging in. Wow, what an interesting day so far. It was supposed to be a Friday in August with a barren, desolate economic calendar, an economic calendar of wasteland. When I was preparing for today at the end of last night, I was looking at the data calendar and I thought today would be a total non-event. Normally this is the kind of day that traders will take a step back, if they even turn up to work, and reassess and review on what's been going on and take a thoughtful approach to it. Alternatively, this is the normal time where wild and fanciful stories can also circulate, but wasn't to be the case today, and the reason being one man and one man only, Weber of the ECB. And the chart I'm showing you here is the euro. Okay guys, I hope you can all see my euro chart. It should be coming up just about now. Can you just give me a Y if my euro chart is coming? Yeah, okay, I've just seen it's just come on your screen, great. Right, so let's have a look at what's gone on today. These Weber comments are really coming into the wires at around 9:30 or so. We were here at the time and I was talking with Dion here in the room saying, guys, this euro feels heavy. This was just before the Weber comments, so the euro was feeling pretty heavy. Then he comes out saying that further action may be needed, further QE effectively, and what that means is effectively lower interest rates, or more a longer period of lower interest rates in the European Union. And that's the main effect here. That's the biggest news that has affected this market, okay? Because he was the biggest hawk. He said, and I quote his statement, the ECB should keep unlimited lending throughout the year end. What that does in effect is keep long-term interest rates low in the European Union for the single currency, okay? So devaluing the demand for euros. And just as we broke through the 128 handle, we had a nice short on when that euro started feeling heavy. I was commenting about it on the room. Then we really started to motor. Then the DAX started to join in. Initially, and I think it was D, you talking in the room, you know, you were quite frustrated because the DAX wasn't actually reacting at all. It's a bit harder to see here, but certainly when this news first came out, we were having the DAX just ranging in a sideways range, not really moving. And then once the euro opened up the door and really started to move, you got the corresponding moves lower in the DAX, okay? So the DAX joining suit, and the E-mini S&P, and the E-mini S&P are on quite an interesting technical point that I'm going to talk about. This is all in the background of a really negative news environment out there, being initial jobless claims. Initial jobless claims yesterday was a disaster. Not only that, but the Philadelphia Fed survey then later in the afternoon added towards our woes. So let's have a look at the E-mini S&P and discuss what we saw yesterday. I'll first of all look at the 15-minute chart. This is the sell-off this morning on the back of the euro. I hope you all understand this relationship. If the euro shifts lower, it can also have a correlating effect on other markets in the terms of making risk assets less attractive, a flight to quality, a flight to the dollar. Okay, and that move pulled the mini S&P lower this morning. Yesterday, however, we got much bigger moves off the bad data, both jobless claims and Philly Fed. So Philly Fed was expected at 7 and the actual came in at -7.7. And this is after the new initial jobless claims data was 500,000 instead of 480,000. That's the first time it's been 500,000 people, new claimants, new unemployed in 1 week. What is the US doing? It's still a disaster, okay? They cannot sort out their jobless rate. Companies are not hiring. They've got a lot of money on the sidelines. Companies have performed well. We've seen that from the Q2 earnings. But they're not yet ready to commit to new hiring levels. They're not yet ready to commit to new employment. And until they do, until firms show confidence in the recovery, then the markets aren't going to show confidence in the recovery, and this is why you're getting these moves. Let's have a look at it on a longer term. Oh, just before I touch on that, sorry. So today For the strategy going ahead for the afternoon, we're not a million miles away from it right now actually. A short at 1068.50 with the target 61.25. We think this downtrend will continue into the Friday session. What, as I was saying, should normally be a very quiet Friday, but we've had a fantastically interesting couple of days. Okay, let's have a look at the bigger picture. This is the E-mini S&P going back to May. Obviously that fat finger of 16 billion, or the rumour thereof, being shown on the left. Concerns on Spain, Spanish debt contagion. And then we have the famous Delusi August box showing the range we had at the beginning of August and what's happened since then. And the reason why I'm sharing this chart is because Rebecca actually in the room pointed out a technical pattern, and this is a technical pattern we were talking about on Wednesday, which is a head and shoulders on the E-mini S&P. Here's one shoulder, there's the head for the August box, here's the other shoulder, and the neckline being a diagonal neckline, as you can see here, creating perhaps, and I was on this for a nice sell signal, a short-term selling opportunity to open up further losses to the downside, with the target being at 1050.50. Okay, this is a daily chart, guys. Put this pattern on, this sloping neckline of the long-term head and shoulders, just to bear in mind on a technical point. If the negative news continues, if the negative sentiment continues, then we will get a push lower through that point. Okay guys, I've got the Bund on here. This is a monthly continuation going back to 2001. Just look at what's been going on with the picture of German government debt here. Okay, absolutely through the roof. 132.92 being hit at the moment. We did hit 133, new all-time record highs. I don't know if this actually puts into perspective. Let me go into a 30-minute chart just to perhaps make it more clear. Okay, have a look since the 27th of July at what has happened to the Bund. That is a trend. That's absolutely no question about it. I mean, Piers was on CNBC yesterday talking about the Bund being, or government debt, in its whole being in bubble territory. That chart looks like a bubble to me. Okay, that's not a sustainable trend in the long term. Am I going to short it? No, I haven't shorted the Bund for a long time. I got asked by Dion in the room. Am I going to go long the Bund? Why don't I just go long the Bund? My answer was I'm not quite man enough. I can't go long this. There's no chance, but I'm certainly not shorting it until the signal becomes clear to do so. And it's not going to be clear to do so until the macroeconomic picture picks up. I was listening to a report this morning from an economist saying the Bund is pricing in an 80% chance of a double-dip recession. Okay, that's in comparison to the stocks pricing in around a 20% chance of a double-dip recession. There's a big disagreement here, guys. Okay, so what have we got today? Really nothing. The focus will be on the Weber comment, further QE of the European Union. The dollar hit 1 month lows. These are 1 month lows at 126.85. That was a great move in the euro dollar. I know a couple of us traded it. It was a great way to start the day, getting some action that we're not quite used to on a slow August Friday. This has been a much more interesting August than we'd normally get. Okay guys, so the picture is bearish out there. The news is negative. There's a lot of fear in the market. I'll be sharing my Bund chart as I go on throughout the day. We're going to be trading the markets to the downside. I hope for the US traders' sake that that's not the whole action that's been seen yet. I think when the traders log in New York at 2:30 London time, we'll see a pickup in volume again. Until then, you might see us ranging in the euro between our entry point and the low of the day, and similarly in the S&P. I would like to see us stay below Rebecca's head and shoulders pattern here, in order to open the door to further downside momentum. I haven't talked yet about oil, guys. Unsurprisingly, we'll have a negative strategy for oil. This will be hitting your inboxes shortly. We are severely down in oil. Started off by the Chinese import figures. Okay, have a look at oil. I was looking, we were sharing the Bund as a trend. Have a look at oil as a trend. This is a 65. Let me go, just try and show a little bit more here. 85. No, it was only 2 weeks ago. We were at $83, there or thereabouts, and now we're at 73. Okay, so that's oil coming off nearly $10 in a period of 2.5 weeks. These are very volatile August conditions. You should count yourself lucky to be able to trade in this environment. Normally Augusts are a write-off, to be honest. Okay guys, so I'll leave you to it for the rest of the day. Any questions, obviously get in touch, send me a message. Curtis, you're asking me for the steepening blue line on the chart. Oh yeah, these are my pivot points. So because I'm using CQG integrated client, it shows me the pivot points that were for each day. So today's pivot point on oil obviously being $74.83. Yesterday the pivot point was $75, which worked really well. Oh, let me talk about that. That was our entry for oil yesterday, which, looking at this time scale, doesn't look attractive, but actually, sorry, I've got this contract. Guys, with your oil, change it to CLEV, because I want to talk to you about yesterday. So this was our entry point long yesterday. We got down there, and it was a fantastic entry point to get long. Okay, that was a nice trade on the oil. But we need to roll over oil, guys, so it's CLEV to the front month. I'm not going to remove trend tools. You can see I'm just using CLEV there at the top, okay? Piers is putting the code for Pro Real Time as well. So guys, may the August fun and games continue. It's a very bearish outlook out there. I can't see anything changing that today, and I think we'll get an injection of pace and volume on the US